Crypto Decrypted.
Every week on our Tuesday show, we bring you Crypto Decrypted. Crypto Decrypted is where we like to break down one big topic. And this week, Crypto Decrypted is tackling navigating blockchain's layers. So when we talk about layers in this space, it's important to understand that we're building on the infrastructure of the internet, right? So in the original internet, there are different layers that came along. You may have at some point learned about the origin of the internet and how it was, founded by DARPA, which is like a US government agency. And eventually it was rolled out publicly and people started building on the internet as a public resource and utility. So when we talk about layers, let's start to paint this picture real quick. Richard, give me your take on simplifying layers for our audience.
All right, so we have layer 0, which I'll let you explain that in a minute. Layer 1, layer 2, and layer 3. So first, let's look at layer 1. This is your baseline protocol. So we look at, for example, Bitcoin, the original OG, how crypto all started. Its base layer 1 protocol only does a handful of transactions per second, whereas compared to like a newer age layer 1 protocol of Solana does like think close to like 40 to 50,000 transactions a second. So it's just a scalability of how fast can transactions, how many concurring transactions can happen all at once. So then layer 2 is a protocol that's built on top of layer 1. It's usually to help with scalability, usually that platforms can be built on top of. So for example, Ethereum layer 1 protocol is there. Then you have layer 2 that's built on top of it. So you have like ERC20 tokens, so NFTs. If you are familiar with those, that's like a layer 2. So then you have protocols that are then built on top of that. So for example, you have Ethereum that was built, and then on top of Ethereum, you then have Polygon, and then on top of Polygon, you have Matic. So getting into like layer 3. So 3 layers above where you originally started. So that's kind of how, just at a base level understanding, those are where the layers start. And then Steve, I'll let you talk to layer 0.
So I want to get to layer 0 actually in a little bit more time here. I want to be able to build on what people understand of like the internet stack first. But your definition was pretty solid there for what we need to at least start getting into your head. The thing that people need to start with, at least in my opinion, to really understand the depth of this is that the way that the internet was built, it was built as a stack. Like literally there's a stack of different pieces that enabled the internet to do the things that it does today. So that is what is called the OSI stack. And it starts from the base layer down there, the physical layer, and it builds up to the application layer. So we're just going to run through this real quick so that you can understand at the origin of the internet, we started with the physical layer. People had to build a layer where it controlled the stream of all of this data over hardware. So like it was all connected by cables that they ran under the ocean from, place to place to transmit data at really high speeds. Now we're starting to do that via satellite, but that's the physical world layer. Then you get to the data link where the computers are essentially formatting that data on the network live so that it can be translated between devices. Then you have the network layer. That is effectively determining, okay, how am I going to get the data that was just translated from point A to point B? Transport layer, we're transmitting data. Session layer, we're starting to control what is considered port connectivity. So connecting platform to platform. So like if you wanted to connect data inflow from one source to another, you need what's considered an API. That starts to get into play here because, again, we're talking about porting data from one source to another. Presentation layer, this is where we're starting to get into what you see on typical user interface, whether you're using Facebook or you're even just using like different like Google Slides, Google Docs, Google Sheets. All of that is like the surface layer of data formatting, and then also encryption, making sure that your data is secure and private. Then finally, the current internet gets you to the application layer, where essentially you have that actual human computer interaction. So you're posting on Facebook, you're tweeting, you're doing all sorts of stuff across the internet, whether it's e-commerce, you pick, watching this YouTube video, for example. Um, that is how it was built. And it could not get to the application layer without having a data link layer. You couldn't get to the presentation layer without having a physical layer. It has to be built like that. So when we get into this larger discussion about blockchain stack, we are actually applying old principles to new systems. You have to build it sequentially. So when Bitcoin came along, just like Richard had said, it was layer one. So in the layers of Web 3.0, as we're starting to develop into this new world of taking ownership of the internet, we started with the network layer, layer one. Now, you see the routing layer underneath that at layer zero. You need to understand that that principle came just after the fact. So people started developing that idea after we already had Bitcoin, after we already had XRP, after we already had some of these very significant precursors that were founded during the cypherpunk era. So network layer one is Ethereum, creating a network, Solana, another network, Cardano, a network, XRP, Bitcoin. All of those are networks. On top of that is where we start getting into layer two, which actually is the broader sense. It is the settlement layer. So, just as Richard had said, with Polygon Matic, it is a layer two system, but it is built on top of a data stack first because you need to be able to flow data into Polygon Matic, which is a consensus system. It's the means of verifying on their network. And then it scales up into the contract. So we mention smart contracts all the time on here. In the Ethereum world, you have three specific contracts. You have ERC20, ERC721, and ERC1155. These are all the mechanisms with which you're able to transact. These are contracts that can execute on the data that is basically baked in below it or that is fed to the contract. From there, we get into modeling an application layer. Richard did mention that that is sort of what is considered layer three. It is and it isn't. So for protocols that are a verified layer two solution like Matic, they can have their own layer two above it because in the situation of Polygon Matic, they actually have started to kind of take on the responsibilities of a layer one in a lot of ways, right? So on top of that, it's kind of like more of like a layer 2.1 because these three layers are really, really essential. So in that case, you start to see these applications form where you're going on a Uniswap to swap tokens. You're going to SushiSwap to swap tokens or buy NFTs. Excuse me. You're going on to Aave where you can handle lending, or even into the gaming world with Engine or Decentraland. All of that takes place at the very top, and none of it can actually work without the underlying layers functioning properly, but also calling upon the layers below it. Then you get to these two outer bands. You have interface and you have routing. So, real quick, interface is where you are actually touching Web3 directly. So, what you have likely on your browser is a MetaMask wallet or a Trust wallet. Both of these are where you actually have Web3 interaction points built in. That's where you come in, basically the comparable to what we had in the internet stack of the human computer interface. Layer zero is the really foundational element that lies underneath all of these ecosystems. That came into play, Richard, like from your perspective, was it probably in the last 3 years?
Yeah, I'd say um, end of 2018 to 2019.
So that's when it started to become a much more prominent idea. And it's this idea that we need not just to have these networks found at layer one, but we need them to be able to communicate. We need to create an internet of blockchains. So Avalanche, Polkadot, Syntropy, and Cosmos, all four of those are layer zero solutions. They're actually working on creating networks of networks. They want Ethereum to be able to communicate with Solana. They want Solana to be able to communicate with Cardano. They want all of those networks to communicate with their main layer solutions that are built on top of these networks. So all of them take unique approaches, but this is what we're talking about when we bring up a stack. One can't function without the one underneath it. So, Richard, based on what you're seeing on screen right now, is there something more that we need to dive into here when we're talking about understanding these layers?
So when I'm looking at this, I mean, I think everything builds pretty nicely on top of each other. But there are some other elements that are coming into this within different ecosystems that I think there's definitely some more that we can unpack.
Okay, what comes to mind?
So, well, I mean, and it might be outside of the scope of this, but like, I think of things of like parachains, and you also just think about like things like ZK rollups, and that's going to be its own world. And we're going to unpack that at a different time, but not to throw too much of a wrench in this, but like as this just succinctly goes through. And of course, for everyone that's listening to this on the recast, highly recommend that you go check this out on our live YouTube, so that all these graphics make sense. But like, again, looking at this, I mean, this looks pretty solid. Again, the only thing that like I might push back on just a little bit is like, at what point does layer 2.1 become layer 3, or like are they interchangeable? Yeah, it's just, let's call that gray for now, but we still have a lot of ways to go on the rest of the layers that are, I'm sure, to come.
Yeah, I mean there are plenty of layers that are theorized on top of this. I mean, and that's like written out in scientific papers. That's why I'm trying to make sure that we drive into, okay, what do we know right now? Right?
Yeah.
If it's going to be developed as layer 3, like it's great, like it'll be developed as layer 3 and we'll cover that on another episode. But I do really appreciate you bringing that up, though, that, if you're listening to this on recast, we have graphics for all of this over on YouTube. And we will also make sure that it's posted on crypto-current.co in our recap of Crypto Decrypted, which will be coming out on Thursday. So what you were saying there with things like ZK rollups and with and parachains, you're right. We should cover it in more depth later, but I think it is worth at least mentioning that parachains are something that is a new methodology that's being specifically rolled out through Polkadot, which is a layer 0 routing platform. Now, Polkadot was also developed on the same basis as Ethereum in a lot of ways, but parachains are what enable connectivity. It enables all of these new players to come in and start to be an innate, like a connectivity enabled DeFi ecosystem, or like starting to enable it to like put its tree branches out and touch other networks. So you need to just start to think about it that way. But the big word about routing is connectivity and interoperability. So that is the entire purpose of layer 0, and I think that can tie that up pretty concisely for today. ZK rollups is an entirely different animal.
And we will attack that a
Uh,
different day.
it's so big. So again, we just dove deep, right? We just covered a lot of information. It's it's not the most sexy thing in the world, but I want to dive into two questions real quick. And the first of which is, what is the actual value of understanding blockchain layers? So, what is your take on this question?
In order to explain it to where the future is headed, you have to understand your past. You have to understand the foundation. And a lot of people, when even thinking about like how is a city built, you think about the infrastructure between cities, and like also understanding like where traffic's going to flow, also understanding where water's going to flow, everything like that. There's a lot of planning that has to go into that so that you can keep building on top of it, whether it is buildings, whether it is places to live, etc. You have to understand the infrastructure of how crypto and blockchain is being built out, because as you start to understand how it all is kind of being built out, you can kind of see where there's voids, you can see where there's opportunities, you can see where certain projects filled a certain void of a particular layer, but where others have failed. Prime example, and again, I might be a broken record here, but I'd like to bring up Solana just because I've used it and I've just seen how much better it is with all these gas wars. Like, Solana saw all the great things that Ethereum did, and they were like, "How do we make this faster and cheaper?" And they said, "Okay, let's just make sure our base layer 1 is faster." And that's exactly what they did. And so you'll start to see other projects start to look at different layers within the blockchain crypto ecosystem and identify voids and say, like, how do we make this more efficient? Or, hey, this hasn't been built yet. Here's a true problem. Here's how we fix it. And that's how you can start to find some of these amazing projects in the space that make a ton of sense. May take time to build out, but once executed, can turn out to be absolutely amazing.
Yep. And see, I think that the way that you just said that, Rich, it really does sum up very clearly the value of understanding blockchain layers from a creator's perspective or like an innovator's perspective. But just so that you at home know this, it also does in fact apply to you. Even if you are just starting to explore the world of blockchain and cryptocurrency, understanding blockchain layers applies for a very similar reason. Because if you're going to go and invest in something and you want to start to understand the language with which they're going to try and sell you on their platform, you should know what it's built on. You should know, okay, this I'm really interested in getting into Immutable X. They build themselves as a layer 2 protocol that makes NFTs easier to move on the Ethereum blockchain. So what necessarily goes into that? You should start to understand the things that make it possible, because especially if you don't see how it's all connected, you're going to end up investing in something that is non-executable, right? The team that is behind it is going to struggle to actually execute against its vision if the layers underneath it are not properly incorporated. So it ends up coming down to like a logic experiment, but it'll make you a smarter investor, especially if we're talking about, fundamental knowledge. If you decide to invest on the long-term scale, having an understanding of blockchain layers enables you to assess and evaluate the fundamental factors of a project a lot better. So that to me is a greater piece of value that you get out of it, even if you're not an innovator, if you're just on the side of like trying to understand blockchain for the first time. So let's speak to that for another second with our second question. Which of these layers deserve the most attention in the current market cycle? Now, that's a big question, Richard.
It's a huge question.
Okay.
Um,
So understanding that we have a limited timeline left and what is currently happening in the market and evaluating the current trends, which of these layers deserve your attention?
right now, if you're trying to, depends on what your goal is. For me personal, it's how do I make as much money in these next couple of months before the end of this bull cycle wraps up. So I think the most opportunity right now is in layer two. Um, I think once we get back into bearish opportunity, a lot of that's going to go back to layer one. Um, and looking at how they're going to continue to build their infrastructures that then make the layer twos and layer threes even better. So I also would say that potential layer threes during the bear cycle could be pretty instrumental as well. So I think right now the big plays in layer two. What do you think?
So before I give you my thought, I want to ask you more specifically, and just for the sake of like reviewing the actual graphic that we put together, when you are talking about layer two, understanding that is
Hmm.
that higher settlement layer, what specifically within that layer are you speaking to? Like, give me three projects that pop out as, you know, layer two solutions that are going to be valuable for the rest of this market cycle.
So it's going to be applications for me, and it's also it's applications are going to be the biggest one, in
Okay.
my opinion. And then after that, potentially data, but I think data is probably going to be a bigger play come the bear cycle.
Okay. So the other, I mean, there was one other piece that you had mentioned that I just want to make sure I point out for our listeners. You did mention some of like the scaling element within layer two. So that would, of course, be speaking to things in the consensus systems as well, like Phantom, Immutable X, Polygon, and Terra. So I just want to make sure that I'm echoing what you had just said. Can-
Yeah, you are, and I still think Terra's and Polygon are going to be just absolutely massive. But as it relates to the immediate like Well, I guess again, it all goes to timeline, but yes, just applications, and I'm still gonna go with data being in the bear, but like the consensus with like a Luna, Polygon, Immutable X is probably gonna be massive too. The challenge that I have with a couple of these is that a lot of these consistent systems are great in theory, and like will make money in you know a decent amount of time, but most of them are gonna fail because it's a very hard problem they're solving. And so it's like, how do you pick the right ones? I don't know that you necessarily can, but if you do, you're going to do extremely well. But like consistent, consistent systems are extremely hard to solve.
I would agree. I think that there's one piece that people need to be thinking about more often than not, and that's when they're evaluating that question of consensus is more so like where is TVL right now? TVL, of course, meaning total value locked. So the amount of value and money that is currently locked up in that ecosystem. That's a huge metric to determine whether or not it's actually got staying power. The other piece of the puzzle there for consensus systems is actual adoption. Like, what does the user base look like? How active are your users? So, to me, all of these, to your exact point, they don't have enough basis to really take off. So, in my world, as I look to the next phase of where we're headed after this cycle, I think that routing and layer zero is going to be the biggest thing. But for this current cycle, I'm probably leaning still more layer one, but I think that I'm leaning layer one if I'm wanting to play conservative. I think that if I want to be a little bit more risky, I'm just like you. I'm going straight to the application layer because that's where people are trying to get their hands dirty right now. They want to be
Yeah.
able to play, they want to be able to start to engage in the world of DeFi and NFTs, and that all happens at the application layer. So, look, those are our quick takes on what we are seeing in terms of what you should be paying attention to within the current market cycle, given these new layers that we're bringing to your attention. But that's going to wrap up our Crypto Decrypted segment for this week. Again, if you appreciate this segment, show us a little bit of love, give us a like. We'd appreciate it a lot. We really do want to make better content for you and to engage with you and keep this conversation going. So leave us a comment as well.